Hey, this is Doug Field, CEO of the Institute for Healthcare Consumerism, along with my co-host Brett Macy, and welcome back to this segment of Healthcare Consumerism Radio. We have on the line today one of the leaders in this space, from an administration point of view. We have William Short, President and CEO of AmeriFlex, and William is also now the current president of one of the leading administrator associations in the business, ECFC. William, good morning.
Good morning.
Hey, good to have you with us. You coming to us from Texas today?
I am. I'm coming down here from Dallas, Texas.
Yeah, good to have you, William. Nice to talk to you, and thanks for spending the time. Give our audience a little bit of background on AmeriFlex, and then we'll talk a little bit about where you see this market going.
Sure thing. So we're I would say we're a technology payment company with a focus in consumer-driven healthcare payments. We have clients in all 50 states, including Guam and Puerto Rico, and actually some clients up in Canada now. And we touch about 30,000 plus employers across the country and deliver a litany of individual participant solutions for the CDHP market, as well as payroll compliance and premium billing collection services such as COBRA and special billing options, as well as our compliance suite of products.
William, you guys have seen a lot of growth over the past few years, and kind of where have you seen the growth in your business, and kind of what do you attribute a lot of the growth to?
Sure thing. So our growth has been focused on kind of where we sit in the market. We focus a tremendous amount of energy and time on the mid to small market. So the average employer size here at AmeriFlex is going to be about 120 full-time employees. And so our growth has come from that segment. And I think the growth has been attributed to a couple of main things. One, our service model. Two, our dedication to compliance. And three, our overall infrastructure. We have our headquarters here down in Dallas, Texas, a new building that we moved into last August. But we also have a large operations center on the East Coast, which gives us full redundancy and mirror image operation capacity, which I think is very critical for this space as this industry has evolved over the last decade. And I think with those kind of combinations being put to play, we have these mid-sized small employers who need the guidance. And so our service model with a dedicated account executive team for each client goes a long way. A lot of these mid-sized employers do not have robust HR departments, do not have access to ERISA attorneys, do not have access to the latest and greatest on what's going on in the world of compliance, in the world of regulation, what's coming out of Washington this week or what's coming out of their state capitals next week. And I think those things combined have really been the factors that have led to pretty tremendous growth over the last number of years.
Now, when you look at some of the things that are facing the industry from a challenging standpoint, what are some of the challenges that you guys see there at AmeriFlex, and how are you guys helping your employer clients, get past those challenges?
That's a great question, and probably depending on the type of day, you'd probably get 5 different answers from me. But I think the universal challenge for everybody in this market is, what flavor of the week is coming out of the government. May that be state, may that be on the federal level. We've had tremendous changes over the last couple of years just from, APACA and the regulations that have come with it. And that's tremendous. There's whatever it is, 100 pages of regulation for every page of that law, and that's a tremendous burden for anyone in this space, not to mention employers to have to deal with, because ultimately the employers, why did they offer benefits before APACA? They offered benefits to attract and retain the best talent, and they focus on core competencies that aren't necessarily offering those benefits. It's how do I make a better widget to keep the doors open? And so that is tremendous challenges that's faced the market today, and compiled with in terms of how managed care grew out of the 80s and into where we are today in terms of the delivery system. And so you have, these different stakeholders that are not necessarily aligned with a central theme of, gosh, why did my employer offer benefits to begin with? And we can go to the history of it dating back to World War II. But the reality is they offered benefits to attract and retain. And then the question is, if that is a true statement, then how do you deal with the outside forces that is the delivery system compiled with the forces that are coming down that make and interpret and write the laws? But with all that said, I think that there is tremendous opportunity to, take those different stakeholders and align them to deliver a better solution that is manageable and something that's appreciated by everybody.
Yeah. William, how do you see your involvement with the emerging defined contribution private exchange market? What are you guys doing to work with those players in that space?
So we track about, I think it's 125, 126 different companies out in the market that have some sort of exchange product. And our approach has been probably more of a fast follower. And I say that because we currently are connected with pretty much every major player out there, from an EDI direct connect situation where we're integrated on different platforms as dictated by our clients or our distribution channel in terms of trying to get a single source solution for enrollment into the different litany of products. So our approach has been, we don't have an exchange product that we manage currently here at AmeriFlex. What we'd rather be is more of Switzerland and build the best products we possibly can in our core competency, and then tie that into different entities that see value in bringing us to the table and doing what we do best in kind of a focus standpoint. I think the exchange market and the defined contribution market is, a big part of the conversation and a big part of the future. And we're taking a kind of on the sideline approach to see who is the winner or winners, and really with the approach that we don't really care who wins, because we want to deliver our core products and be the best at what we do to everyone that is in need of these solutions.
Yeah, and I think most of us in this space see that if private exchanges do as a lot of us predict it's going to do, it's really going to drive the fast growth of particularly the HSA, spending a saving account, which is one of your sweet spots to helping companies administer and manage. So you see good things coming.
Now, William, you actually, your background is not in insurance or employee benefits. You actually started your career in the banking world. How has that shaped your perspective, and if at all, does it impact your overall strategy there at AmeriFlex and leading the team?
Sure. Actually, a little-known fact, I actually started in my dorm room with a wellness disease management system that I designed. And the reason it failed miserably and had to move back in my parents' basement, which I tell you they were happy and disappointed at the same time that I moved back home, was no one was willing to pay for it. No one had a financial incentive at the time to actually quantify a value for it. And that's how I actually came into the banking world, was via the Archer MSA. For those playing at home, that was the precursor to the health savings account. And in terms of coming across that and then figuring how to actually to deliver solutions that were meaningful for people, I think it gave myself and my team a unique perspective on actually how to industrialize these processes. Banks are highly regulated. You expect that your bank card, your prepaid card, or credit card, or money flow works. Not sometimes, works every single time, which is kind of unique in this consumer-driven account space, because the account should not work in a liquor store. There are nuances, so you kind of have this combination of two worlds that up to this point have kind of been, not really playing together. And I think that's where CDHP was really brought two different worlds together. But really to answer your question, I think it's been phenomenally valuable. When we approached building different platforms or solutions in terms of claims processing, for example, we take an approach that is probably different than most people and have access to different experiences and different systems that allow for us to build a solution that's more industrial strength. And so it's that thought process of, we do have to have audits, operational audits, financial audits. We do have to have redundant centers. We do have to have this stuff that has been really foreign to really this cottage industry that is trying as hard as it can to move up to more of an industrial solution.
Now, William, when you kind of look at the marketplace out there, and I know you've joined ECFC and leading that as well, great group, have been to their shows, great shows that they put on as well, and leading the industry there. Where do you see the opportunities in the industry? And also, if I'm an employer out there, what should I be doing right now? What would you recommend me as the employer? What should I be looking at? What should I be, having my team focus on from your perspective?
I think, take the first part of that. Where are the opportunities in this industry? Well, where the market is going, in my opinion, is actually a road that's been traveled in other countries. And if we go south of the border to Mexico, they have a two-tiered system. They have their public system, and they have their private system. And the private system is phenomenal. It's fantastic. In fact, the terms of medical tourism, you'll go down to a private hospital in Mexico City, and they'll have a giant hotel attached to their complex for medical tourism for the private sector, the private solution. And I think we're going there very quickly. Here in Dallas, there are a number of new private hospitals that have sprung up in the last 3 or 4 years. Every corner is now having a new urgent care center that's being built that is going to be catering and beginning to cater to that private payer in terms of the consumer being the one that actually releases the cash, which then translate, well, then how are the individuals going to be in a position to pay with cash? And the answer is CDHP. And so that translates down from where the delivery model is going, and, two-tiered there, the private tier, and then we're going to have what I think will be more of a utility, that will be more of the county hospital VA model that comes out of all this stuff out of Washington on down to the states. You then have the question, well, who is then going to be part of that second tier? And I think it comes back to the absolute truth about why the healthcare world has developed in this country the way it has, and that employers, prior to APACA, they didn't have to offer benefits. Why would they offer benefits? Because it was a way for them to attract and retain. And so if that's a true statement, and I really believe it is, maybe I'm incredibly biased, I think employers will begin to focus on how they can deliver on that promise, or that deliver on that reason for them to have the employee come work for them compared to somebody else in the competitive marketplace. And so I see employers focusing on, wow, why wouldn't I offer an FSA when my employees can benefit on a pre-tax basis? I can benefit on saving on taxes. What a great win. Why wouldn't I offer that as a benefit? Why wouldn't I offer the opportunity to couple to whatever the major medical plan looks like with voluntary benefits that's outside of the future Cadillac tax and outside of APACA? Why wouldn't I offer those things, which are all cash entities that are going to be more desirable for these participants as they say, wait a minute, do I want to go to the county hospital and wait in line for 4 hours, or do I want to pay up and go see a concierge doc? And so I see employers starting, and we see this in the market we play big in the mid and small market, saying, how can I keep it simple? How can I deliver on this so I can attract and retain the best? And it comes back to these litany of products that allow for them to deliver rich benefit plans at an efficient price that delivers on the attract and retain fixture.
Well, William, hey, we really appreciate you joining us on today's program, and would love to have you back. Hope you have a great weekend there in Dallas. And to the rest of our audience, stay tuned for the next segment of Healthcare Consumerism Radio.